Hi, it's Lori Richardson with Cornerstone Home Lending on Monday, July 25th. Just wanted to give you a look at the markets in the week ahead. Last week's European Central Bank meeting, or the ECB for short, turned out to be a negative for mortgage interest rates, and with no helpful impact from U.S. economic data to offset that, we saw mortgage rates end the week just a little bit higher. So today we're going to talk about a couple things. Number one, a look at the ECB meeting and what came from that, a lot of housing data, and a look at what's ahead this week. So let's just jump right in and talk a little bit about the ECB meeting in general. Investors overall were disappointed in that meeting. There was some hope by investors that the ECB would make some changes to monetary policy that would ease the impact of the Brexit vote. That did not happen. Now, for mortgage interest rates, usually we see looser monetary policy by global banks with bond purchase programs is usually a positive for U.S. mortgage interest rates, and they actually go lower. That did not happen this week. Last week's reaction to the ECB or the lack of stimulus added resulted in higher U.S. mortgage interest rates, as we all saw. Now, the bottom line is that the comments from the ECB leave the door wide open for them to make a change to monetary policy in September. And that could have an impact, and it could have a positive impact on U.S. mortgage rates. We'll continue to keep you posted there. Okay, let's take a look at housing data. Extremely strong housing data reported last week. Existing home sales rose in June for the fourth month and to 5.6 million. And the thing I want to pay attention to here is that that's the best level that we have seen since February of 2007. Sales are up year over year of 3%. But keep in mind that happened in a period of extremely low inventory, which we're going to talk about. Inventory right now in the U.S., we're sitting at a 4.6-month supply of homes for sale. Now, most analysts believe that a 6-month supply creates a balanced market between buyers and sellers, listings coming on the market and selling. Right now we're at a 4.6-month supply, and we're seeing home builders working hard to narrow the gap from an inventory perspective. The important thing to note here is that the Commerce Department reported that there were more homes under construction in June of 2016 than there were any June in the last 8 years. So again, good news for housing. The FHFA house price index was up in May. Year over year, it declined just slightly to 5.6%, but that's still an increase of 5.6% over last year. Still considered to be just right and sustainable given where we are. Right now, we've got just over 2.2 million homes for sale on the market. That's down 5.8% year over year, but keep in mind that demand, as we all know, is still very strong. The average days on the market dropped from 40 days last year to 34 days this year. Again, good news for housing. Along with the median house price, that actually increased to $247,000, up almost 5% year over year, and the highest number that we've seen on record. So overall, very strong housing data, and it just shows that housing continues to be a bright spot and is not getting ahead of itself. And this week we will see more housing data. On Tuesday we will see new home sales be released. On Wednesday we will see pending home sales, so kind of a look at what is coming, durable goods orders, and then the Fed meeting on Wednesday of this week as well. I'll tell you kind of a side note, very little anticipation, very little anxiety over this Fed meeting. Analysts feel like the Fed is fairly handcuffed at this time, and so there really aren't any expectations of much changes coming from that Fed meeting. But nonetheless, it does happen this week. And then Friday, we will see GDP reports, or gross domestic product. Rates in general, conventional 30-year fixed rate loans, we are in the mid-threes, solid mid-threes. 15-year fixed rate, low threes, high twos. FHA and VA in the low threes, and 30-year fixed jumbo loans in the high threes, low fours. So rates are still great. If there's anything that you're thinking about doing, it's a great time to consider it. Let us know how we can help.